Thank you. Good morning, everybody. This is Jennifer Marr with the Putnam County Business Council, and we are here this morning to answer your questions on the Paycheck Protection Program loan forgiveness. So we have with us this morning, I don't know why I'm calling you Dr. Thomas J. Morley, who is the director of the Rockland Center of the New York State Small Business Development Center. So welcome, Thomas. And before I let you take the floor, I just want to go over a couple of things. We will get to as many Q&As at the end. If you feel your question has been answered, if you could put that into the chat box so we can get to another question. And if we don't get to all the questions today, although we're going to do our best, we're going to end at 10. We will just make sure you provide. I have everybody's email address, so I will get you that answer by the end of day tomorrow if you don't get it today. I am filming on location. I have to do some due diligence for a client. So I'm in a new facility that has kind of a loud HVAC and a couple other quirks, so bear with me. And but I thought this is an extremely timely and important topic. So welcome, Thomas.
Pleasure to be here. Thank you. Appreciate the invite.
Absolutely.
Okay. So we're going to take a look at the Paycheck Protection Program and the loan forgiveness. And there have been some recent changes. We'll go over those at the end. Jennifer's got some documents that she'll send everybody after the event,
yes,
which is a copy of the presentation and also a copy of SBA's latest application for forgiveness and what we call guidance, their policy statement on forgiveness for lenders and for borrowers. So you can read what the bank is going to be reading as well. And this just came out on, I believe, last Friday. Yeah, today is Thursday. No, actually, well, the final one came out Tuesday. So this is the latest information that we have. So we're going to take a look at a review of expenses, what's eligible, what's not eligible, the actual forgiveness aspect of this, then how you request the forgiveness, what the loan conversion would be for that amount which is not forgiven, some helpful tips going through the process, what your exposure is in audits, the interim final rules. There have been enough IFRs, interim final rules, coming out. I'm not sure why they call them final or interim because they just seem to keep changing anyway. And then some additional resources that'll be handy for you as you go through, trying to get forgiveness for your particular business loan. But we wanted to slip one quick slide in that was just released. The governor announced it the other day, and the guidance came out on this one yesterday. So it's the New York Forward Loan Fund. So before you get too enthused, this is applicable to folks who have not received an SBA product, either an EIDL or a PPP loan. It is limited. There is a typo on the slide that I should have corrected since I actually knew about that mistake yesterday, so I'm falling down on that one.
Undefeated typos, so you're in very good hands.
Okay, good, thanks. The eligibility is actually 20 employees, not 2 employees. It's 20 employees and gross revenues of less than $3 million. You've got to be in business for at least a year, and you do have to be located in New York. It is a state-based program. The good thing about this loan is that it's a little bit more forgiving than some of the other products. Yeah, the term's a little bit different. It's a slightly lower interest rate, but it's a shorter term. It's only up to $100,000. This is very much targeted to smaller businesses, Main Street businesses, things like that. And it seems right now like it's going to work pretty well. They also did one other thing that I respect in how they set up the program. And they did break the amounts down by region. So the Mid-Hudson region, which Putnam is part of, has to receive at least 12% of the fund. The fund right now is at about $100 million, and the state's continuing to try to raise money. When they do things like that, they do tend to get some banks that throw some money in and things like that. So I think it's going to work out pretty well. So you can pre-apply. Just go to the NewYorkLoanFund.com address, You can file a pre-application because until the region is open, you can't apply. Until your business is open, you can't do this, but you can pre-apply, and they'll connect you with a local microlender that will be the local processor for it. So it's worth checking out. So I figured we'd throw that in since we had everybody online today.
Yeah, absolutely.
Okay, just some themes to keep in mind as we go through everything today. The purpose of the Paycheck Protection Program from the federal government was employee retention. That's why they made the funds available. That's how they have to be used. You know, there's a lot of folks, well, I need money for this, I need money for this. We understand that, but that wasn't the purpose of this program. This program and forgiveness in this program was intended for employee retention. The business deal on the table is with the bank, not with SBA or Treasury. They're writing the rules, but the bank is interpreting and applying those rules. And we've had a number of conflicts. I was going back and forth yesterday with our folks at SBA. We have a bank that has said we're not participating in this aspect of paycheck protection. You know, to which our physicians are, well, what the hell are you talking about? You can't like pick and choose. This is like McDonald's is, you know, participating in the buy one, get one free or something. So it's being worked on, but yeah, keep in mind your deal is with the bank. So if you were one of the folks who didn't deal with a local bank because, you know, let's face it, I won't mention too many banks like Chase that were hard to deal with. If you chose to deal with another bank or were referred to another bank, that's who your deal is with. We've got a lot of clients in this area that have deals with Midwestern banks because they had availability, they had capacity for processing. Some of the major banks here, and I don't like to use names like Citibank, but you know, between them and Chase, there were a lot of folks that didn't even get considered. Their applications, they couldn't even get an application, so they had to go elsewhere. Mm-hmm. So keep in mind, your deal is with your bank, the bank that you actually got the loan from. Make sure you carefully read all the documents. It is a contract. It's a debt instrument. It's like a mortgage or any other loan, like a car loan.
This is very similar to the mortgage process.
Right.
I get that. Backed by Fannie Mae or FHA, but you're dealing with your bank.
Right, absolutely. So, you know, read it carefully. We've had some silly stuff come up already. One bank, I don't even remember the name of this bank, but they require that your application for forgiveness be received on the 60th day following the date of origination. Well, what the hell's that? Why does it have to be in on the 60th day? Not the 61st, not the 59th, but it had to be in on the 60th day. Which strikes me as a bank that's, you know, kind of setting it up to try to play some games later on. So please make sure you read all your documents. That's what you're stuck with.
Right.
Now, what happens during the 8 weeks following receipt of the funds is important to forgiveness. You've got to pay extremely close attention to your numbers. Now that I've scared you in terms of that, here's close attention. If you're using QuickBooks or other, you know, Sage or you know, some other, you know, financial system in your business, you're in good shape. You may have to set up a separate general ledger account to track the expenses associated with paycheck protection, but you don't have to get silly about it. If you're using a paycheck service like an ADP or Paychecks or somebody like that, they already have reports that are formatted for this. They'll have new reports that are formatted for forgiveness, so that's going to help a lot. And keep in mind, again, as we said, your deal is with the bank. Bank speak is number speak, not business speak. They're bankers. They're not delicatessen owners. They're not restaurant owners. They're not hardware store owners. They are bankers. So if you've got third-party numbers that say, here's what you did with this money, the bank is going to be like, oh, okay, it's ADP saying it. They're good with it because they speak numbers. Third-party numbers are a good thing. Don't listen to the rumor mill. 8 weeks is not becoming 6 months anytime soon. You've got to complete your forgiveness irrespective of the complete forgiveness irrespective of use while beneficial is not happening. This is commercial activity. This isn't consumer activity. Consumers get lots of protections. Oh, you can't do this. You can't evict them. You can't do this. You can't do that. That doesn't apply commercially. That applies to consumers. And yeah, it'd be wonderful if the 8 weeks became 6 months. It'd be wonderful if the 8 weeks didn't start until your particular region opened up. It'd be wonderful if you could get complete forgiveness regardless of how you used it, as long as you used it for your business. They can't make those sort of wholesale changes to the rules of the program for a whole variety of reasons, not the least of which, let's say that you applied 6 weeks ago, 7 weeks ago. You're almost finished with your 8 weeks.
Right.
You adjusted your business to do what you had to do to comply with the program. And then we find out, well, now we're going to change the rules. So my competitor down the street now gets a different, distinct advantage simply because you guys changed the rules. I would not be a happy camper with that. So they've got to be careful with some of these things. Yeah, there's lots of chatter out there, but you made a deal with the bank, you signed a piece of paper with the rules in effect at that time.
Yep.
Those are the rules you're going to be stuck with. Okay, now we're going to switch into some stuff that's drier and a little, whoa, I think I just hit another key. There we go. And a tad more dry, shall we say. The costs that are eligible for forgiveness, the specific costs, employee salaries, including employees' federal tax withholding, which is one of those mathematically silly things. If you pay somebody $500 a week, of which $100 gets paid in taxes, they can either say, okay, you can take the $500, or you can take the $400 you paid them plus the $100 in taxes. You're still taking $500. So
right.
It's just a question of which way you want to look at the math. If you've been in a food service or other tip-related activity, cash tips or the equivalent based on employer records of past tips.
Right.
So if your folks are reporting, hey, I made $10 in tips today, well, that's the number that you got to go with. The fact that it might have been much more than that, that's not germane. One of the underlying things that we do need to keep in mind as we look at all these numbers and stuff, if you didn't pay taxes, you can't participate in the program. What the federal government is saying basically is if you play nicely in the sandbox, we'll play nicely too.
Right.
So if you reported tips and they were taxed, okay, then they're eligible. If you didn't report them and they weren't taxed, no, you're not playing nice in the sandbox. You know, we're not going to cover those. Anything else that you pay in terms of vacation leave, parental, family, medical, or sick leave, dismissal or separation payments, you know, assuming dismissal for a reason, those are eligible costs because they're paid to an employee. Payment for group health care benefits, like insurance premiums and stuff, that's an important consideration. If you pay, for example, many electrical contractors will pay benefits through the union. You need to get a statement back from the union that says this amount was for health care, this amount was for retirement, this amount was for education and training programs, this amount was for outreach programs at the union, because those other items are not eligible. The retirement is, the healthcare is, but not the education benefit. So you need a statement back from the union saying this is what you actually paid. Oh, we've got 6 questions already. I will get to them in just a second. So payment of any state and local taxes assessed on the wages of employees is an eligible expense to report as well. Now, for independent contractors or sole proprietors, as an employer, if you've got employees on a W-2 format, and you've got some independent contractors, not uncommon, for example, with distributed sales operations, where somebody who works the territory number 8, which covers Illinois and Michigan or whatever, they're responsible for their own expenses. You don't get them a car, you don't pay their cell phone, and you pay them as an independent contractor, so you pay them on a 1099. You cannot include that. However, they can apply themselves as an independent contractor for 8 weeks of income. So these are some of the expenses that are eligible. Let me take a quick look at the questions just to see if some of them are applicable. Okay, workers' comp insurance is not allowed. That's correct, it isn't allowed. The reason being is New York is one of the states that does not do it as a tax. If it were done as a tax, it would be allowed. So sorry, but that isn't allowed. The employee portion of medical insurance is not allowed to be written off even though most have had significant payouts. Can this be reconsidered? If I'm understanding the question correctly, the employee's portion of medical insurance isn't included because it's paid by the employee. However, again, if we go back to our example that you paid an employee $500 for the week's work, if they paid $20 of that toward their health insurance, that has no impact on your books. It processes through your books, but you're taking that $500 gross payment to the employee. So in effect, it is included because you're deducting it from the employee's pay isn't really germane. How does this apply to a sole proprietor? Sole proprietor has to be able to prove their income. So if you've been a sole proprietor and you're filing, and I just see another question coming in, with the Schedule C, yes, the Schedule C is what you would use to prove your income. The way that's going to work is you'll take your Schedule C for 2019, divide your total earnings by 12, that's your average monthly earnings. You'll multiply that by 2.5, that's what you can apply for.
Just want to reiterate, please try to use the Q&A and not the chat box. We have questions all in one spot. So if you did in the chat box, move on over to Q&A.
Oh, okay. Cool. Now, there is an issue on folks that pay with a draw versus folks that pay on a Schedule C. Talk to your accountant in terms of what you have to do basically is be able to document that you derived money from the business. Schedule K, for those who do a K1, transfers a tax liability. It doesn't necessarily transfer money. So Schedule K is not eligible because it's just transferring a liability. It's not transferring a value. Health insurance paid for more than a 2% shareholder that is part of the wages. Is this eligible? I'm not sure I'm understanding that question. You know, if you're paying health insurance for someone who's not working, that's a choice that your business is making. I talk to us offline on that one. Okay. I was paying my employees for weeks before the money was deposited and my business was closed. Can that be used for the 8 weeks? No. Your time frame for the 8 weeks starts at the date of loan origination, which for all intents and purposes, not when you signed. It is the date you actually received the money. You can pick an alternate 8-week period starting with the first payroll after the money was received. That was particularly helpful for folks that do a bi-monthly payroll. They pay on the 1st and 15th or 15th and 30th. That you could start with the first payroll after the loan origination date. You still cannot go past 8 weeks of expenses. That 56-day limit is cast in stone. We're going to get to FTEs a little bit later on. We're going to get to applying for forgiveness. So I'm going to close the questions for a bit, and we're going to go to the next slide.
And I said we were going to 10. I was wrong. I was thinking it's 9. We'll go to 10:30.
Okay. We can do that.
Or till whenever. Before or after.
Okay. Why am I not advancing here? Oops. There we go. Okay. So in terms of application, you guys, I'm going to just go through this one real quick because you guys probably already done this. That your aggregate payroll costs, et cetera, and seasonal employers that you can take your 2019 averages for the same period in 2020 that you're targeting with the Paycheck Protection Loan. So if you had a lot of seasonal workers in May and June, you know, you're kind of covered for that as well. They did straighten out something that people were concerned about because there was a mathematical issue with it. And that was what the number of employees that you report on the application was a head count. When we get into a little more detail on forgiveness, you're looking at FTEs for forgiveness, full-time equivalents. That's not compared to the number of employees by head count that you put on the application. It's compared to the FTEs that you had in place on February 15th of 2020. Okay. Okay, so some costs that are not eligible for forgiveness, compensation over $100,000. And what you would do with this essentially is credit, for folks that have already applied, you probably saw the box on the application where you had to reduce the amount by those amounts that were over $100,000. The employer side of federal employment taxes is not eligible. The employee side is, as we noted earlier, unemployment and disability paid by the employer. The state portion only is covered. If you pay federal unemployment and disability, that is not covered. The feds are not giving up any of their own money. They're letting you take credit, though, for the state. If you pay payroll processing fees, that which you pay to ADP or Paychecks, that's an eligible expense. Kind of like when you do your tax return, you're allowed to deduct the cost of preparing the return. Workman's comp is only deductible if it's paid as a tax to a government entity. Almost never in New York does that happen. That happens in a number of other states. And since it's a tax, it's allowed because the law said you can deduct state taxes. This doesn't affect a lot of people, but it does affect some. Any compensation employee, we just say outside of the United States, which is true. There's actually sort of two parts to that. One is if you've got employees whose permanent address is outside the United States, that individual is not eligible. If you pay, for example, you maintain a salesperson in Europe that handles European sales for you, but is employed by your company here because you make the stuff here, that employee, unfortunately, even though they are an employee of yours, that employee, unfortunately, is not eligible because they do not live in the United States. Detroit, which is the only city in the United States from which you drive south to go to Canada, there's a tremendous amount of cross-border employment in the Detroit area. So there's a bunch of folks out there who had to delete people from their application. Okay, qualified sick and family wages for which a credit is allowed under other sections of the Families First Coronavirus Act are not eligible expenses. Essentially, and we'll get into this again a little bit later on how this interacts with EIDL, the government's only going to give you something once, not twice. So if you're taking, like the IRS employee retention credit, you can't take certain other things with respect to paycheck protection. If you've got these qualified sick and family leave wages that you're taking credit for, where essentially what the government said is we want you to pay sick leave to folks who maybe would not have had it if they've got the virus, and you paid that, you're taking a tax credit for that. You can't report those wages for the tax credit and report those wages for paycheck protection. You can only report it once. Not unreasonable. Okay, non-payroll expenses that are eligible for forgiveness. Interest payment on a mortgage incurred prior to February 15th. February 15th is a magic date. Keep that one in mind. Payment of rent or lease begun prior to February 15th. We've had a number of folks who've asked, so I'll just throw this out there in case some of you folks are in the same boat. Okay, I'm an electrical contractor. I own the building I'm in, but I own that in a real estate company. I pay rent to myself, which is the smart way to insulate liability and for tax purposes and everything else. Is that rent still eligible even though I'm paying it to myself? Yes, it is, provided you've got a lease and provided you can document that you've actually been paying the lease.
Right.
You can't suddenly start paying yourself rent because the feds are paying it. You have to have a history of paying your rent. If you missed a month or two and business was bad, okay, no one's going to get silly. But you can't start paying yourself rent now that you haven't paid in the past, and you have to have a lease in place.
That will be something that people really get diligent on moving forward. I always tell my clients, I sell commercial real estate and residential, but run your property like a business so that it's all there. It's all clear and transparent. That's the way you have the most lending power, the most, all of that. So I think that will be one thing that will really come out of this, is the way that people are handling their own real estate.
Yep, you're absolutely right. Keep in mind also, I don't want to assume folks don't necessarily understand things, but there's a reason EIN numbers look like Social Security numbers with the dashes in the wrong place. Your Social Security number identifies you as a taxed entity, as a financial thing, as an entity. The EIN does that for your business. It is an entity. It isn't you. You are not it. You might be very ego invested in your business and you might see your success, reflected in that, but financially, no. And you need to operate them as separate entities.
Yep.
If you buy your building as 123 Main Street Realty Corp., and that's the only thing it's ever going to do is rent that building back to you, it's still a business. It must operate as a business. You can't say, well, it's my pocket either way. I'm putting the money up for it either way.
Yeah.
Doesn't matter. You're going to make a loan to your business or whatever your accountant says you should do for the initial paid-in capital. But, keep in mind, they're all separate. Okay, so payment of any utility for which service began before February 15, 2020. We did have a bunch of questions on what exactly is a utility. 9 times out of 10, if you think it's a utility, it is.
Right. Because
it'll say something like New York Power Authority, Con Ed, Orange and Rockland. It's going to say something like that. Verizon. Verizon Wireless, which actually is larger than all of the utilities combined in New York State, just to give you an idea how like big wireless is nowadays. Yeah, it's a utility. The easy way to define utility, if they're subject to the gross receipts tax, they're a utility. If they have what's called a CPCN, Certificate of Public Convenience and Necessity, if their rates are regulated, they're a utility. The definition for utility here has gone a little bit afield of that, and with good reason. If you're purchasing internet service from, Tom's Internet Service Company, that is considered a utility.
Right.
Even though I may not, in fact, be charging you gross receipts tax because I'm lumping it with other stuff, whatever. Cell phone service is a utility. So if we perceive it as utility, it probably is, but the definition of that's actually fairly broad.
Sure.
Interest on any other debt obligations that were incurred before February 15, 2020, provided, and we probably should have put this on the slide here, provided that that debt instrument or debt obligation includes a security interest in underlying real property. So you could make lease payments on a delivery vehicle. You could make lease payments on a forklift. You could make lease payments on a car. However, you do have to make sure, and this is again where it gets kind of fuzzy with some small businesses. If you're in a home-based office, the IRS accepts your information. For this, it doesn't. So no, if you've got a home-based office, you're pretty much screwed. The bills that you're going to pay that are eligible for forgiveness have to be in the name of the business. So if you go with the Verizon, 4 for $1.73 cell phones, because, well, it's cheaper, and I need one for my husband, I need one for my kids, I need one for my business. Yeah, well, if that bill goes to Tom Morley and doesn't go to Tom Morley Industries, Tom Morley's out of luck. It's not a business expense. It's only a business expense if the bill is in the name of the company. So if the car lease is in the name of the company, then you're good. If it's not, then you're not.
Right.
It's a very black and white situation. We will talk a little bit later on about FASB and GAAP, Financial Accounting Standards Board, and Generally Accepted Principles of Accounting Practice. If your business complies with FASB and GAAP, you're going to be okay. Your accountant should be complying with it. That's why God invented accountants, to comply with things like that. And they should be doing your books in a compliant manner. So just, again, going back to what we said, banks speak in numbers. We speak in words, they speak in numbers. Well, the rules, the grammar rules that we follow for words, the grammar rules that are followed for numbers are FASB and GAAP. So as long as you're reporting consistent with that, you'll be fine. Sole proprietors can only claim interest, rent, and utilities if their 2018 or 19 Schedule C included those items. So if you didn't include the item on your taxes previously, you can't include it now. Like, sorry guys, if you didn't, again, you got to play nice in the sandbox. Okay, the time frame. The Act establishes the bar is eligible for loan forgiveness exceeding the amount spent by the bar during the 8 weeks following loan origination. There is the alternate period, and when Jennifer sends you some additional information afterwards, you'll see how you can pick the alternate period that is covered in the guidance. The maximum amount that can be forgiven may not exceed the principal amount of the loan. Why we even included that? You're applying for forgiveness. You're saying to your bank, and that they're going to then say to the government, I borrowed $100,000 for payroll during this 8-week period. I spent $110,000 on payroll. The bank's going to be, well, that was nice of you, but we're only forgiving $100,000 because that's how much your loan was. So you can over-report, and that's fine. Reporting more than you have to, unlike a tax return or some such thing, over-reporting here doesn't make any difference. They're just saying, okay, you had to report at least X, you reported X plus, so that's fine. The performance period begins immediately on the receipt, okay, or the selected alternate period, and Jennifer, like I say, is going to send you some stuff after today's presentation that defines what that alternate period is, and we'll talk about it a little bit later also. Okay. There's a 75% payroll limitation, which actually is the minimum. You have to spend at least 75% of the Paycheck Protection money on payroll. If you don't, it gets reduced accordingly. We'll go through the math on that a little bit later. But you have to spend 75% on payroll. So if you borrowed $100,000, you have to spend $75,000 on payroll and payroll expenses. Keep in mind, it's not just the straight payroll, it's the related payroll expenses, the insurances and everything else. The FTEs Full-time equivalents have to be not less than 75% of the number at February 15th, 2020. Not the number at your application, which was based on your 2019 numbers, but your actual full-time equivalent employees at February 15th of 2020. Full-time equivalent, it's just math. 2 people working 20 hours a week is 1 FTE. 4 people working 10 hours a week is 1 FTE. It's 4 names, but it's 1 FTE. If you reduced salaries and wages, it has to be restored to within 75% of where it was at February 15th. And then you can include your other expenses, per the previous slide. But the important numbers to keep in mind, 75% has to go on payroll. If it doesn't mean nothing's getting forgiven if it doesn't, but it's going to be reduced proportionately. Okay, if you spend 75% on payroll, the entirety of the loan is eligible for forgiveness. If you spend less than that, the amount's going to be reduced. The maximum forgiveness is decreased pro rata based on payroll cost as a percentage of the total loan. We're not going to go through an entire math class here, but here's a kind of simple example. Company gets $10,000. They spent $5,000 on payroll, $4,000 on rent, and $1,000 on utilities. Their maximum forgiveness is only going to be $6,600 because they didn't spend enough on payroll.
Right.
So again, it's just math. It'd be wonderful if we could do it differently. It'd be wonderful if we could say, hey, as long as you spent it on company stuff, you're good to go. No, this was intended to be spent on payroll. You have to keep as many of your employees as possible. You won't be penalized for a reduction during the period of February 15th, April 26th if you rehire laid off employees or restore decreases in wages or salaries. The challenge for the federal government was to keep people employed. I don't want to sound political, but I do believe a distinct motivation for this program was such that people would not be reported as unemployed. So the percentage of unemployed people in the economy would not hit 20 or 30%. So, I don't want to attribute negative motivations to things. People were still getting paid, so that's a good thing. And whether the company pays you or the government pays you, people are getting paid. It's faster for employers to pay employees than it is for the government to pay employees. Way faster. So it was, there are some other arguments to be made that this was a much more efficient way to get money into the hands of people that needed it to feed their families and things of that nature. So loan forgiveness will be proportionally reduced if the applicant reduces headcount or reduces salaries and wages by more than 25%. There's a bunch of rules on the headcount, on the FTE rather. If you make a valid offer of employment to an employee and that offer is declined, essentially that number comes off your February 15th number, which is the basis for comparison, and it comes off your employed number. So it has no impact on you. So if you had 5 employees, 1 employee refused to come back for whatever reason, you made them a valid offer. They said, hey, I'm not coming back. I'm scared. I'm whatever. I'm sure what a lot of folks are thinking right now is it's not that they're not coming back, it's that they're making more money. Unemployment is very generous right now. If you made less than, without taking too many taxes into account, basically if you made less than $50,000 a year, you're making more in unemployment right now than you made beforehand.
Right.
So folks don't want to come back. So it kind of leaves you between a rock and a hard place. How you choose to treat or enable your employees is up to you. There are a couple of cautions that I will throw out there for you on this. If you've got work available and you say, hey, Tom, your job's available, why don't you come back on Thursday? I say, I ain't coming back. I'm making too much money on unemployment. I say, dude, it's a valid offer. You have to document that you made me the offer. So send me an email, send me a letter. If the only thing you can get from me is a phone call back, make sure you log that phone call in your diary that I spoke to Tom at this time, on this date, on this phone number. And Tom said, I'm not coming back. You have to be able to prove that. You have to be able to document that. If you want to be a nice person and say, yeah, I want to let him keep collecting unemployment, good. Money's coming out of your pocket in two ways. One, you're paying your unemployment and ratings charge over time, and you're going to lose out on your forgiveness. Your choice. If you enable them to collect unemployment when they in fact shouldn't be collecting unemployment, you're also participating in a fraud against the government.
Right.
Are they going to come after you for one employee? Probably not. Are you even going to get a nasty grant? Probably not. Do I want to be the one unlucky person in Putnam that DOL singles out and says, you screwed the labor department, we're going after your butt?
That would be me if it happens.
Yeah, it probably would be. I heard that. You know, labor was talking to
get
us the
away
other
with
day. They're
nothing.
like, we're going after Jennifer.
Yeah, I get away with nothing.
Right. So yeah, so if you're one of those folks like Jennifer that gets away with nothing, yeah, again, I'm not trying to say you got to be a hard ass, and I know it's very hard in small employment environments, but you've got competing interests. Keep your interest in mind as well, that you've got to protect you and your business. You do not want to be a participant in an active fraud against the government.
Which overall protects the future of that employee, because this employment is not going on forever. So your job is to protect the business to ensure their future employment. So
Right.
It is compassionate. It's difficult.
Right. Yep. It's one of the hard things to do as a business owner. Okay, so if you've decreased an employee's wages during the 8-week period more than 25% compared to the most recent full quarter of employment without employee, forgivable portion is decreased dollar for dollar by the decrease to the employee's wages exceeding 25%. So if you cut salaries, again, the understandable business tactical decision. Business sucks. I have to cut things. Okay, so I'm going to cut wages. Well, during the 8-week period, you have to restore those wages to at least 75% of where they were. The easy way to look at that is it's not your money, it's the government's money. And if you do it right, you're not paying it back, you're going to get it forgiven. So get them back to the 75% of where they were or more. You know, be nice to your people if you can. Again, think about it and think about what you're doing. Okay. So assuming that you got $100,000 and you did spend $75,000 on payroll and payroll-related expenses, you can't claim any more than $25,000 in other qualifying expenses, but your maximum forgiveness is the $100,000. The really fun part of that word is forgiveness, which means you don't pay it back. So they didn't call these grants, they called them loans because you have to use it as intended for it to go away. I don't know a lot of loans out there in the market space for small business that go away if you use them correctly. I mean, it's kind of like free food. It always tastes a little better. Well, free money always feels a little better. So, you know, if you got $100,000 and you don't have to pay it back, that feels pretty cool. So again, kind of follow the rules. I'm not trying to be nuts about it, but if you play by the rules can work for you in this case.
Agreed.
Okay, so company got $100,000, but they only spent $60,000 on payroll. They didn't hit their 75%. Their maximum forgiveness would be $80,000. So if they spent $100,000, only $80,000 is getting forgiven. They're still going to owe $20,000. Okay, so requesting loan forgiveness. For it to be forgiven, you have to make the request of the lender, providing documentation for the span under the period. The lender has 60 days to review and approve the request. If a small business received an EIDL, economic injury disaster loan grant, and a PPP loan, the EIDL grant amount will be subtracted from the Paycheck Protection forgiveness. People say, why? I thought these programs were unconnected, that I could do both. Yes, you can do both. But you're only going to get free money once from the government. They won't give it to you twice. Sorry, that's just the way the government is. It's the government. They're kind of rigid in their thinking. So that's going to be deducted. So if you did have enough employees that you got a $10,000 grant, your forgiveness is going to be reduced by $10,000. It's a net zero sum at the end of the day. You got 10 grand for free here. We took it off over here. Okay, so yeah, at the end of the day, it still works out for you. Okay, requesting forgiveness, you have already certified in your application that the funds were needed for COVID-19 related purposes, that the funds will be used to retain workers, and that the request is not duplicative of other SBA funds for the same purpose. You made those certifications when you applied. Remember the little boxes you checked off on the form? You were certifying to all these sort of things. So that's important only insofar as that's your foundation in requesting forgiveness. I needed it for this. You guys lent it to me for this. You know, it's kind of like you go to the bank and get a car loan, and then you go buy groceries. Bank's not going to be happy. You got a car loan. We're supposed to get title to a car as security on it. We can't take title to a box of Cheetos. So yeah, it's not like, oh, well, I just fudged a little bit and said this over here. No, you can't do that with the government. Okay, so borrower certification required. Okay, if you have employees, you have to send in your 941s or other similar quarterly wage reports. You can use pretty much whatever. Your accountants, if you're using an accountant, will know what you can prove, what you can send in as evidence of your payments. You've got to submit evidence of the business rent, mortgage, interest, payments on real or personal property, utility payments, etc. Generally, the easy way to do this is to create additional general ledger accounts. Don't create a new bank account. That's a pain in the ass. It's pain for you, it's pain for the bank. There was a question, one of the advanced questions in terms of the taxation on this. The forgiveness of this loan and the idle money are not taxable amounts. Additionally, however, anything you report against loan forgiveness is no longer an expense to your business. You already reported it once and you already got your benefit for it. You can't also you can't also still take it off your taxes.
Right.
So again, you can't double dip. So you're going to have to certify a bunch of stuff. Have a couple of separate general ledger accounts, like for utilities. Right now, you've got a utilities general ledger account. Create a PPP utilities general ledger account, such that the utilities I paid during the period using those funds will be recorded in that general ledger account. I'll then print out my general ledger, my journals in terms of entries and everything else. I will have canceled checks available, or if I'm paying, we pay online at my bank. I'll go in and I'll print a little payment receipt, and I'm good to go. Again, think FASB, think GAAP, think just documentation. It's kind of like doing a tax return. You put numbers on a piece of paper, you have to be able to back up the numbers. If you can't, hey, people say, well, geez, my business does this, it does that, and, well, I didn't really report that. If you're willing to lie to the people that can put you in jail, namely the government, you're on your own. So, you can't play fast and loose with this stuff because you're going through your bank first. They're going to look at it. If they don't trust it, they're going to say no to it because they're on the hook for it with SBA. Okay, so loan conversion. The Paycheck Protection Program starts off as a loan with interest accruing from day one. Your tax dollars are at work because SBA is actually making the first payments on that loan. There's always people that profit from disasters. And they could be like, the disaster cleanup companies. Hey, they wait for a disaster and then that's where they make their money. Okay, no worse than people who sell gas. So they make money when you need gas. One of the reasons the banks did this is because the banks are receiving a 5% fee for doing it, number one. And number two, they're getting interest. Granted, it's only 1%, but the government's paying it. So it's a zero risk loan. The government's guaranteeing it and the government's paying it. That's about the lowest risk loan that exists. It's kind of like on a balance sheet, we use cash and cash equivalents. Well, stuff the government owes me is a cash equivalent.
Right.
So it's like, okay. Now, the unforgiven balance will amortize over the next 2 years with a payment beginning 6 months after disbursement, not forgiveness, after disbursement. So you're likely to be 3 or 4 months into it already by the time we know what's not going to be forgiven. And so within a month or two, you're going to have to start paying that over a 2-year term. So for folks who said, well, I need the money for this, this, and this in my business, not for payroll. Okay. You're going to pay it back at 1% cheap rate, short-term, expensive payment. You've also exposed yourself to the government coming in and saying to you, you told us you needed this for payroll, but that's not what you used it for. I mean, if you come up a little short, if you do 60% on payroll, no one's going to get stupid. That's not a hard number, by the way. But if you only use 5% on payroll, yeah, someone in the government who is justifying their existence at some point is going to come after you and say, hey, dude, 5%? You didn't really, you weren't telling us the truth when you applied for this. The interest on the forgiven portion of the loan is also forgiven in terms of you. The reality is SBA is paying it to the bank. So again, the bank's making money. Damn, I should be in banking instead of this economic development stuff. So, yep. All right. Some helpful tips. If you apply but haven't received your funding, check with your lender or find another one. There's still over $100 billion available. If you happen to have waited until now, for whatever reason, you might actually be better off because you'll get money when you're getting ready to reopen, because we technically started reopening yesterday, I guess it was, or Tuesday. So if you haven't applied, give it some serious thought. There's a ton of money still out there. And that's in spite of the fact that SBA has done 2.88 million loans. I don't generally speak in defense of SBA, and there's horror stories out there about, I haven't heard yet on this, I didn't hear this, I didn't get that, I didn't get this. Keep in mind, SBA is a domestic business assistance agency. They do loans. In any given year, they'll do 100,000 loans, maybe. In 7 weeks, SBA did 2.88 million loans.
Wow.
The logistics alone are silly. The computing systems alone are silly. And SBA, of course, does not have the most modern computers in the world. By the time this is over, they might, because they've had to modernize to talk to everybody. But, you know, I got to give them credit for what they did do. Was it perfect? No. Was their communications perfect? No. But they did a hell of a job getting 2.88 million loans into small business hands in 7 weeks. I mean, it's huge. Okay, we can hook you up if you need somebody in terms of a lender that's still taking applications. You know, like we said earlier, make sure you read and understand all your loan and forgiveness terms before you sign your documents, which are generally done with DocuSign. This, by the way, all these 2.88 million loans, these are all electronic. I mean, just think of just a fundamental change to how we did business.
Yeah.
We have gone through $550 billion, almost 3 million transactions. And I'm sure there's a ton of paper that people have printed locally.
Right.
But it was all done electronically.
Yeah, it is amazing.
Yeah.
It's good for closings moving forward.
Yeah. Well, you guys have been doing DocuSign for a long time in real estate.
Yes, we have.
Yeah. And I found it very interesting. I was getting grief from a local attorney in a small town. I did not show up for closing. I signed everything remotely. I entrusted it to the title company, the title transfer company, and said, hey, they've got my money. They represent my interest in this. This is like the dumbest deal in the world. It's a cash real estate deal.
Yep.
I don't need to drive 2.5 hours to show up for this. They were very upset about it.
Oops.
Okay, so specific questions about forgiveness should be directed to your lender. Maybe, I don't necessarily, yeah, I wrote that, but I'm not sure I still agree with it. Depends on what your question is. Send it to Jennifer. She'll send it to us. We'll get an answer for you. In part because trying to reach your lender nowadays is borderline impossible, since lenders are all working remotely also.
So we have about 11 minutes. It's okay if we go a little bit over, but I want to try to keep it to an hour.
Okay, we should be able to do that. I don't have too much stuff left. Okay.
Perfect. And then I want to make sure we get to some of these questions and answers.
Yep, we definitely will. Okay, so tracking your expenses. Work with your accountant to come up with the best way for you to track how you're doing it. You know, based on your business. Just keep records of everything you're spending and that you plan to request forgiveness on. Make sure you have, you know, access to invoices, documentation, cancel checks, receipts, that sort of stuff. It ain't rocket science, guys. It's no different than a tax return.
And someone asked if they pay by credit card, is that a problem? I would assume no.
It depends on whose name is on the credit card.
Okay.
I'm not trying to be a smartass, but
right. So the business name that applied for the loan needs to be on the credit card.
Right. Now, it gets weird. I mean, if you write yourself a reimbursement check, can you make the case in an accounting scheme, an accounting schema, I should say, not a scheme, an accounting schema, that yes, I paid this on behalf of the company? Like if you pay your utilities on your credit card because you like to get the points, I would stop doing it for 2 months and just pay it with a check. Because even if you reimburse yourself, the government's going to look at, well, you didn't need to pay, you know, with your credit card. Why didn't you do this? Right. So you don't open yourself up to potential questions. It's not worth the grief. Watch your head count or FTE with each payroll. This is going to be really important. You can't pay fewer employees more money. You have to hit both targets there. Now, that said, you also can pay people necessary money. You know, like some business have to pay hazard pay. People
Right.
say, I'll come to work, dude, but I'm getting exposed to shit, so I want money for it.
Yep.
And you're having to pay more money. That's okay.
Wow.
There's also no link between FTE, headcount, and name. So do I have to bring Tom back? No, because Tom was a painter and we don't need to paint the offices right now. But I'm going to bring Jennifer back because Jennifer sells stuff and we need revenue. So it doesn't matter. Now, I could also say I'm bringing back 3 more salespeople because I still don't need to paint the offices because no one's working in them right now. So there's no connection between who and how much. So just keep that in mind. So if you need to hire a little differently in your company, you can do it. Okay, just real quick on audits. On the 28th of April, they announced any loan over $2 million will be audited. Can't say I blame them. SBA is going to conduct a review. Safe harbor keeps changing. It's even not even May 14th. The safe harbor rule essentially says if you got the money and you don't think you need it, you have an opportunity to give it back. And they won't ask any stupid questions like, geez, why'd you apply in the first place? Which it was important that they say that because otherwise you could give the money back and then they could say, well, you lied on your application. So we're going after you for fraud. But I gave you the money back. Well, what about those 3 weeks in between there? So the safe harbor rule was important. Generally on smaller PPP loans, if you find out you can't use the money and you shouldn't have gotten it in the first place, you can still give it back and it's not going to cost you too much. These are where the interim final rules are. And again, Jennifer's going to send you a PDF of today's presentation and some other stuff. So don't worry about writing real quick to write down the links. You'll actually get a copy of the links.
Yep, and they'll be on our website permanently.
Permanently. So I will exist forever.
Forever.
In the ether world.
Until it goes down the list. But you can always be searchable.
That's true. Okay, some more resources in terms of where you can get stuff. The frequently asked questions one in particular, that's a really good one to go to because that's the one they keep changing by adding to it. And they're responding to questions from borrowers, from lenders. How do I do this? How do I do that? What happened with this? What happened with that? And that's where those answers are going to be. Okay, if you need assistance, you get free assistance from either SBDC, and we consider the Putnam County Business Council to be a partner of ours as well. So you can either call them and give them the question, they'll get it over to us, or you can call us, either way. Okay. If you want to meet with an SBDC, you can go to that link and request an appointment, and that automatically goes to the SBDC closest to you, and they will set you up for an appointment. So I will now go to, we have 11 questions that we're up to.
You might have answered some of them. Do you want me to read them or you want to go through them?
I can see a bunch of them already, so I will kind of zip through them and hopefully I'll answer them all. If the initial $10,000 is 100% grant, yes, it was if it's on idle. There are no strings attached to it. You can use it on, it's working capital for your business. So you can use it on anything you would use working capital for. Inventory, parts, materials, signage, you can use whatever you want for. However, just make sure you don't use it if you also get a Paycheck protection loan. You can't use it for the same expenses. Okay, no, I applied, but how I applied for forgiveness. Talk to your bank about how you apply for forgiveness. A lot of the banks have not figured out yet how that's going to happen in terms of simple logistics. So is this going to be an online application? Do they want you to fill it on paper and send it in? So that's up to your individual bank. I'm 95% sure it's all going to be electronic. How do you figure out the FTE portion of forgiveness? You add up the hours worked and divide by 40. So if 400 hours were worked in the course of the week, you divide by 40, that's 10 FTEs. Whoops, I'm not sure what my screen just did. Okay. The $100,000 limit, is compensation below $100,000? Yes. So if somebody earns $120,000, you would fill out all of your stuff on your application for a paycheck protection loan. And then there's a box where you deduct from the amounts over $100,000. So employees that make $120,000, the first $100,000 is covered, not anything over $100,000. Now, the interesting part of that is if you pay people $200,000 and you cut them to $100,000, that doesn't trigger the 25% reduction rule because they're only concerned about the first 100 grand. Anything over 100 grand, they don't care about. That's just between you and the employee. There was a question about a 2% shareholder of an S corporation. The health insurance premiums are part of the shareholder's wages. again, get to me offline on that because I'm not exactly sure what's being asked in that question. Can an FTE be a fraction? I.e., one worker for 30 hours. Yes, you could have fractional that, so many hours is 1.7 FTEs. Yes, that can happen. Impossible to calculate FTE as of one date. The math must have a range for which to add hours. What was the date range to calculate FTE year? For a loan, I used the time frame 2019. Yes, you can pick the closest pay period to February 15th of 2020 in terms of calculating FTEs. Can you comment on collect unemployment before and after PPP? Yeah, you can collect unemployment before and after, just not during. So, yep, you can collect unemployment. Just can't do it during the same period. That's double dipping. We use per diem employees, so one pay period will not give an accurate representative of our true FTEs. Talk to me offline and we can look at your specific math. Idle calls in advance, is that a grant? Yes, it is. The reason being, you didn't sign any paperwork to get that. It's not like you signed a loan agreement that said, yeah, I'll pay this back. No, that didn't happen. If a business owner has not been taking a paycheck since the beginning, can they pay themselves extra to make up income? I'm trying to think how I want to answer that. You can't pay payroll earned if I'm assuming the question relates to using Paycheck Protection money. You can't pay amounts earned prior to the 8-week period. So I guess the answer is no. But it depends on how that's actually happening. Okay. And again, the use of per diem employees, one pay period not give an accurate representation of our true FTEs. You have to pick the period for your FTEs. Like your FTEs for forgiveness are going to be the 8-week period that you were spending the PPP money. That's going to be the period you're calculating your FTEs for. And the average FTEs for the period, like you could use the comparable 8 weeks ending February 15th as your period of comparison. Okay. I think, are salaried employees considered one FTE? Well, unless you abuse them and make them work 80 hours a week, yes. Yeah, salaried employees are generally considered one FTE. Yeah, there's some weird situations out there where you've got 3-day-a-week salaried employees that you pay them a salary, but they only work 24 hours. Yeah, apart from that, yes, a salaried full-time employee is one FTE, regardless of the hours worked. And that's one of the problems of being salaried is that you don't necessarily get overtime. So yeah, a salaried employee is considered just the one FTE. Okay. Do we have any other questions?
I hope I didn't delete any that weren't answered. I was trying to follow, but I believe you answered them all. So I thank you so much. You made something that is pretty dry information palatable and broke it down in layman terms for people like me. I'm sure that we will have some follow-up questions. And if you could type into the chat box your contact information and also maybe state it once more time.
I don't know that I can type into the chat box.
Okay, I'll type into the chat box. I have your contact information. If you could state it.
Right, and if anybody's concerned, you can email Jennifer, and she'll email the question to me, and we'll get an answer to you as well.
And you can email me at where you registered, info@putnamcountybusinesscouncil.com. But I'm going to put Thomas's phone number here in the chat box. 6-6065. Okay. Well, thank you so much. And I look forward to this new relationship and this new partnership, and we will talk in the near future on what else we can do together to help Putnam County businesses.
Cool. Likewise, the SBA number, I'm not sure it was SBA that we had up there. SBDC's number is the 845-356-6065.
Just assume they meant that, because I always confuse the two. I know the difference, but still there's way too many, what do they call them, acronyms?
Yes.
Yeah.
Hey, it's government speak. We have to keep people confused.
It took me like months to figure out the difference between PPE and PPP. I'm kidding, but not really.
Right.
All right. Well, thank you so much. Have
My
a great
pleasure.
day, and we will talk to you soon.
Thanks, guys. Take care, everybody. Good luck.